Hello, welcome everyone. Very good morning to you all. My name is Ellie Burns and I am Head of Product and Customer Marketing at IDnow, and have we got a webinar for you today. So welcome to why you are doing remote onboarding wrong. And let's be honest, remote onboarding is no longer a luxury, it's a necessity. But with rapid digitization comes a whole wave of new challenges, from keeping customers happy to staying compliant with ever evolving regulations. And obviously, there's that one issue that looms over everything, casting a shadow on all our efforts: fraud. And in the quest for smoother, faster, and more user-friendly onboarding experiences, we often overlook the small cracks that fraudsters might exploit. And that's why we're here today. Together, we'll uncover the blind spots and bad habits that may be leaving your onboarding processes vulnerable, whether it's a lack of trust, compliance issues, or just underestimating how crafty those fraudsters can be. Now, I'm thrilled to introduce our panel of experts today. So I'd like to kick off with a round of introductions. Maybe I could start with you, Bertram.
Thank you very much, Ali, and thank you so much for being a part of this panel today. A very important topic, obviously, and it's an ever-evolving area. So it's really interesting to get that learning from peers and getting qualified questions from our audience today. So my name is Bertram Paulsen. I'm heading up the LC&I KYC team in Denmark. Together with my colleagues, we're doing onboarding and KYC on all the largest corporations and institutions here in the region. I've been doing financial crime prevention for many years, working with multiple banks. So KYC, sanctions, fraud, etc. It's very much one of my key areas and interests. Thanks, Ali.
Awesome. Anna?
So my name is Anna Sciliano. Thank you very much.
The regulators and FIUs in their journey in uplifting their skills as well. So if we think a couple of years back of what a KYC process was, it was very scarce. It was, we even had a thing called light KYC, and it's something that we laugh at today because the standards of what we did 10 years back compared to now is, it wouldn't stand anywhere. I don't think any of us would put our names towards it, so it's definitely been a massive journey. But then also, we need to be very clear about that we're not even there. If we compare ourselves to other areas within a bank, I like to compare us into the credit side of things. We're not even halfway there. There's so much more that we should be looking into, that we should learn from, and that we should educate each other about. I've been in a couple of sessions during the year. One of the sessions, we invited regulators in, and had that sparring back and forth to say, this is how we see development happening, and then getting the regulators part of that discussion to say, okay, but they saw it slightly different, but similar trends. AML in Frankfurt obviously is going to be a big thing. Everyone is putting a lot of faith to it. I don't think that it by itself can stand, but if we can have that open environment to talk to each other and understand what did we do right, where are we failing, how do we do this even better going forward, I think that's definitely a key to success here.
Awesome. And is that is that sort of what you would advise, close relationship with the regulators to have that face-to-face time to stay ahead and be able to navigate those changes easier?
For sure, Ellie. And I think that we are seeing some trends in the right direction already now. I know that the new EID coming out, AML, as I mentioned, it talks about how we, as focused on Europe, obviously, but how we can improve things, how we can share documentation, how we can have that learning, but perhaps more crucially, how we can have a more unilateral view from a regulator perspective. Because what we're facing, what any large financial institution is facing across multiple areas, is that every time you enter a new market or country, you are faced with new regulations. And it may be there's some need to it and very specific to that country risk, but it may also be some very basic things. We're saying, why are we seeing it so differently from each one of these countries, even neighboring countries?
Absolutely. Anna, have you seen sort of this struggle to navigate these global and local regulations when you look at Europe? How are companies navigating current regulation? And of course, we've already mentioned AML, and there's the IDIS coming up. So how are businesses sort of navigating this?
What I've seen businesses struggling with mostly is to accept change and understand that things are evolving. I've been in this industry, in the financial industry, for more than 20 years. So I've seen the traditional KYC, photocopy, stamping documents. I started like that. Now today we are on another level. The ID verification, understanding and who is your customer and really verify that who he claims to be has gone to another level. So what I see is, first of all, having the right culture, understand that fraudsters are innovating and we cannot beat them with manual tools. We will fall a victim of fraud. This is, in my opinion, we need to embrace new identification methods which will assist in our onboarding procedure and move on. So that's the main thing. I believe that's where the big game will be, because when you have a fraudster that is constantly finding ways to bypass your systems, then you understand that you need to quickly adapt, because fraud is not about compliance with regulations. It's about cost for my business, for your business, for the financial institution.
That's a really good point. Yeah, because with compliance, so compliance and fraud in banks are always separate, but it's quite interesting. They're both very integral. Obviously, you have to have them at the onboarding. So what I'd like to know is, how do you balance that internally, the compliance teams and the fraud teams, and make sure these processes and this onboarding flow is secure, but also trusted and seamless for the user? How does that work in your organization, Bertram?
So I think this is where many banks outside of our bank is struggling or really want to be successful, because the key is to have that balance, as you're talking about, Ellie, here. So how do you ensure that you have the right focus on the actual risks and preventing the fraud and the bad actors in the areas who want to utilize this a bit more friendly and forward-thinking way, but then also making sure that for the ones where they're actually good actors, where they want to have, they could have critical business urgencies, there could be other means to why you want to have this. So it's quite critical that we understand that. It's also where you see, well, are we talking about fraud into private individuals? Because obviously they don't have the same protections. It's not as easy as from an individual perspective to understand if someone else has been utilizing your name. Whereas if we're onboarding from my perspective, a complex corporation, multiple subsidiaries across multiple countries, I think we need to put the effort in doing the onboarding to actually handhold our customers to then say, how is it that we're doing this? Why is it that we put so much effort into doing this? And they may come back to me and say, Bertram, why are you not having a smooth process where we could just be onboarding in 15 minutes? And this is also where we then have to look into, well, what's the next step? Because from my perspective, onboarding isn't, when I'm complete with the onboarding of a customer, that's not my task done. Then I start reviewing them next year, or in 3 years, or in 5 years, depending on the risk levels, right? And this is where we need to handhold our customers to understand that. However, I do recognize that we do have many customers, individuals and corporations, where we need to focus on the mass market, on the process, making that smooth. But it needs to be balanced, and that's the critical part and how we're becoming successful in this space.
Awesome. And what do you think about striking the balance between compliance and fraud?
For me, sorry.
Oh, no, I asked Anna, sorry.
Oh,
it's all about communication of the two departments. They have different goals, because, fraud is not only fraud in regard to the customer, there's also occupational fraud, which is very different. So they are different departments, but they have some correlations, some things that they have in common, the onboarding procedure. So they need to be in direct communication constantly and sit down together to find solutions that are both compliant and also prevent fraud. Easy to say, it's even harder in practice, but that's the overall idea.
And with businesses, because obviously to strike this balance, everyone's looking for the right combination of technology. And if you look across Europe, we have very differing solutions. In the UK, you have data checks, face and dot. In Germany, you have video, you have EID coming in. So how do you guys go about choosing the right solution, having the right stack in order to strike this balance? I think that's really important for our listeners today. Bertrand, do you want to kick us off?
Of course. So this is obviously, as soon as you go into a space and a solution where we're talking about making it as smooth as possible and everything is electronic, EIDs and so on, it is definitely the future. It is definitely how where we should focus on how to implement that. But also we should recognize that, first of all, individuals, not everyone is at the same level when it comes to these solutions. So we need to be prepared for actually hand-holding a large portion of our customers into a different segment that still see we doing it the sort of say old-fashioned way. But then obviously when we have this way of doing things and everything is electronic, there's a massive risk that this is being exploited by bad actors. And we need to be prepared for that. So first of all, obviously to protect our customers, but also to protect us in the financial institutions. And some of the solutions that you mentioned here, Ellie, it's quite interesting to see that a lot of them goes into, well, how do we make things smooth? How do we do it better? Multi-factor validation, third-party data points, and so on, which can be automated and you can make it as a smooth and easy process. But then also some of the things that you're pointing to, we're seeing live facial detection, and we're seeing some kind of a challenge response test where it actually requires a person within the financial institution to have that back and forth and interaction with the customer. All of a sudden, we bring it back a bit to then say, well, we need that face-to-face interaction. It cannot be fully automated because we don't trust the technologies for it yet. And I think that's really, quite interesting.
It's really interesting because it seems everyone's going AI, okay, frictionless. But actually, there is that human element, especially if you go into areas like social engineering and APP scams when it's the genuine person pushing these things through. So because this is an interesting thing about this concept of good friction, right? So Anna, what's your view on this good friction? Some people are putting all their eggs in the AI basket, but there are inherent risks like bias in the machine learning models. So, you have these varying solutions, but there are those ones which embrace the good friction and give higher assurance. What are your thoughts on that?
My thought is, first of all, to understand the legal requirements of the country you want to operate. We start from there because maybe you are familiar with all the ID solutions that exist in the market, to be familiar with AI and everything. But if you don't understand the requirements of the regulator, you're nowhere. So first of all, start from there. Then understand the risks that you have, how fraudsters can abuse your product and services, and then consider your customer. Try to see things from the customer's point of view and understand when the friction is good or when the friction is bad. Think like customer, act like a customer. That's the way I approach things. We need to get into the customer's mind and that's the only way to find a balance. Understand what you're required to do, what type of ID solutions is accepted by the regulator. If I consider my country's requirements and let's say Australia's regulatory requirements, there are huge difference on what is required. And we need to understand these requirements before we move on and identify and then understand what is good or bad.
And how do you guys think big companies who do have multi-region presence are dealing with this? Are they doing well in personalizing and customizing those journeys for those local markets. What's your view on that?
So I think Anna was actually very much spot on that we tend to focus on how we want things done and then force that outwards. It's very much an inside-out exercise, whether it's going to be towards the regulators, our customers, and so on. Each one of us is very much focused on the silos that we are fed into. So it's actually a really good exercise, what Anna is also focusing on here, to then say, what is the requirements that we're facing? What are the customers that we're facing? How do they interact? Because even if I come up with the perfect solution of how to do it, my customers are multi-banking. So as soon as they step outside of the onboarding phase with me, they go to my peer banks, my colleagues over there, and they're faced with another perfect solution, a gold-plated solution. It's the very top best in class, right? And all of a sudden, our customers are faced with different standards over and over and over again. Back to my point of how we as a financial institution find it when we talk to our regulators. We're finding the very best regulations for Denmark, but then when we have the conversation with our with the FRUs or regulators in Sweden, Norway, Finland, it's the very best, but for sure they're different from what we learned already. So it's quite an interesting exercise, and I think everyone in this value chain could learn from it to then say, fine, let's come together, and this is where we're seeing the trends are moving towards, so it's really positive, but say, let's come together and then find one way of doing this, or at least a common couple of ways, and then you could also these and test it out in your market and with your customer needs. But to go in isolation and come up with the golden solution, I'm quite sure this is how we're going to fail as an industry if we continue with that way.
Interesting. What do you think, Anna?
So I think if you're operating in many countries, the ideal thing is to find a solution that is complying with all regulations, and it is possible in the sense that you may find a solution. Usually regulations specify the minimum requirements, so maybe you can find a solution that satisfies the minimum requirements and then satisfies also the minimum requirements of the other country and the minimum requirements or the average requirements of another country. And maybe this approach would be helpful. If there is a way to do things this way, that would be the ideal. So you have one onboarding procedure for all your customers.
Awesome. And so compliance is the thing that we have to do. But the thing we're actively losing money on, the really bad pain point, is obviously fraud, isn't it? I'd just like to delve into this a little bit, because obviously the fraudsters, the days of someone in a hoodie in a basement are long gone. Yeah, FTSE 100 companies with their own R&D, their call centers, everything like that. And how I liken it is whack-a-mole. So you hit one and then they pop up somewhere else. So just a broad question, how do you deal with this evolving threat that's ever present, and the danger of, if that fraudster is onboarded and that token of trust is assigned, then they can reap havoc in the rest of the journey. So how, as organizations, do they approach this being bombarded at every which way? Anna, do you want to kick off?
Yeah, when I was working in a bank, we had the security system, the physical security. The people there, the employees of the bank who came to set everything up, they told us one thing. We are not trying to stop thieves overall globally in this country. We're not trying to stop thefts. We are trying to make thieves go elsewhere. So we do things as hard as possible for them, so they choose another branch. This is what we are actually doing in compliance and fraud prevention. We are trying to make things hard for the fraudster, hard for the money launderer, hard for the person who is subject to sanctions and is trying to use our products and services, and make them go elsewhere. So this is the approach we are trying to use. We are not trying to stop fraud all over the world. We cannot, even, no matter how much we try. And this is the right approach, in my own point of view, on how to find a suitable method of sending fraudsters away.
Do you think that's risky, though? So just playing devil's advocate, because when I was working at a firm called Threat Metrics, it was obviously network fraud, and basically fraudsters work across industries, use cases, industries. So they will credential test at media, get a hit, and then go for where the money is. So this so there's two questions here. So this go elsewhere, do you not think in the connected ecosystem, even if they go elsewhere, they'll eventually come back to that bank where they cash out? And second of all, because of this hyper-connected fraud landscape, do banks need, and this is a very prickly question, do they need to share fraud data in a hashed, anonymized way in consortia in order to play the fraudsters game and to actually come together and collectively fight fraud? That's a very big question, two aspects. But yeah, Anna, what do you think about that with what I said about the sort of connected aspect?
Yes, of course, fraudsters, they are interconnected all over the world. And what I would say, they know IDnow's weaknesses, if any, they know the other platforms' weaknesses, if any. And of course, they will attack where they believe that they can defraud the system. Yes, they will go away for some time. Of course, after some time, they will try again. They will go find another way. Okay, this system is strong. Okay, let's find a way to bypass and attack again. It's a never-ending game, and it's a cat and mouse game, because companies offering this type of solutions are trying to catch up with fraudsters, and fraudsters are trying to find new ways to bypass. Yes, they are interconnected, but I mean, this is what we can do for now. We need to make things harder for them, meaning in a sense that having an onboarding procedure that will make it as hard as possible for them to, let's say, a deepfake video, make a deepfake video, or present a fake ID. Yeah.
Okay, cool. And Bertram, what do you think about the sharing? Because when I, like 10 years ago, when I was working pure fraud, we were talking about this, and obviously everyone knows you never want to give the gaps in your fence to your competitor, do you? But for me, in order to fight the fraud network, you have to have a network of your own. What's your view on it?
So it's a very relevant topic, and it's definitely where I see a lot of new trends going. So one of my friends mentioned to me the other day and said, no wonder that you guys are failing, us as a community are failing in this area, because remember that you're punching out at 4 or 5 in the afternoon, and the bad actors continue all night, and they're organized in a much better way. So obviously this is, to your whack-a-mole point, if we want to win in this area, perhaps we need to change the rules a bit. And one item is definitely to share information across to the FIUs in a much better way, but also to share the learnings. I spoke with vendors and the FIUs in the Baltics, and the countries there are actually one of the regions where we see a lot of new trends in this direction. So a lot of information sharing across the banks when it comes to bad actors. I also know that in Australia, they had a case study that showed the decrease of fraud for individuals. And it dropped massively because when the regulations were changed to have banks share this information. So if I detect someone who's a bad actor or who's a victim for fraud in my bank, I let the counterparty know, so my peer bank know in the receiving end of the funds, to then say, I think that you have a bad actor and I know mine is the victim. And all of a sudden you start creating this network of information and making, to Anna's point, making this a whole lot more difficult for the fraudsters to utilize this, right? So I think that we need to change the rules a bit. Otherwise, we're going to continue with this whack-a-mole thing, right?
Exactly. And at the onboarding point, you know, as fraud is ever changing and evolving, you hear things like deep fakes, synthetic identities, repeat fraud. What from where you guys are sitting, what are the biggest threats at onboarding at the moment when it comes to fraud, and how are you as an organization fighting that? Yeah, let's start with that. Anna, do you want to go for that one?
Yeah. Again, we'll come back to the same point that fraudsters are innovating. That's the greatest challenge. And I was reading 2 days ago about a company that is advertising a subscription model. They sell fake IDs and fake deepfake videos to fraudsters so they can bypass, and they claim that these videos and IDs, these fake IDs, they can bypass a lot of ID verification solutions. So you understand this is something new. In my opinion, it's something really serious, and companies offering this type of need to catch up with these changes, and the bank or the financial institution need to be in direct communication with their vendor to ensure that the method is current. And let's not forget about customer experience, okay? Whatever change we made to our onboarding procedure, consider your customers. I have worked in customer service for many years, and customer experience in my mind is at a very high level, because if your customers are happy, your company will go well. So keep that also in mind, while at the same time trying to have the latest technology to be able to spot potential deepfakes and to be able to spot fake identities. Because today it's so easy for someone to create a fake identity, and we need to stop onboarding customers with traditional ID verification solutions or solutions that we were using 5 years ago or 3 years ago. We need to move on at the same speed with fraudsters.
Absolutely.
At least.
At least, yes. Bertram, what do you think? What are the biggest threats that you're seeing at the moment?
So I think Anna really well covered sort of how the technical aspects and how to prevent that. Some really good thoughts and ideas into this. I also see that we as bank, coming from a bit more of a conservative and without sounding too naive, we do have quite an in-depth process when it comes to the onboarding. However, I do also recognize that we do have colleagues and peer banks here in the region who actually see it as a competitive advantage to be onboarding their customers within 15 minutes. And it sounded too good to be true, so I had to test it myself just from a expertise and seeing how that actually worked in real life. And if you're low risk with the best intention, you come right through it. But obviously, with a onboarding for 15 minutes, it opens up to a lot of risks that Anna just pointed towards. And this is also where we're seeing that onboarding from a KYC and AML perspective, for whatever reason, has to be as quick as possible with no hiccups, no bumps, no questions asked. But if we relate to some of our colleagues within the bank, from a credit perspective, they do a lot of due diligence. You couldn't just do a new mortgage without being investigated in depth. So for some reason, we're seeing it differently when it comes to AML and KYC, perhaps because we don't understand the magnitude of the risks in this area.
That's really interesting. But I was going to talk about the customer experience, and because from our side, the vendor side, we have to be as quick as possible. But when you're talking to your customers and end users, do you think they would be receptive for more good friction if it was safer, if they felt safer, if it instilled more trust? What do you think the customer demand? Because we always talk about the global digital economy. It has to be quick, remote, 24/7. But is there wriggle room for customers actually to have more friction, maybe a human that takes them through, guards them against social engineering, things like that? What are your views on that? I'll start with Bertram, sorry.
Yeah, so I actually think it comes down to us understanding our customers even before we do the onboarding. Normally, at least when I think of onboarding, this is where we get to learn the customers. But in reality, we should have that dialogue even up front, so we understand where are they in this journey, because it's also a learning aspect, right? Luckily, we are, at least here in Denmark and the Scandinavian countries, we are right now on a trend where it's in the medias all the time. We get documentaries, we get groundbreaking reporting that really shows the magnitude and how big and common this risk is. So when we have our individual customers coming to us and say, I don't know exactly how to do this, I don't feel comfortable, then we can take that on. If that means that every single person walking in the doors of the bank should be handheld through, I'm not sure, because it needs to be relevant to sort of that customer group, how they see things. And this is where it becomes complicated, right? Because as soon as you open the doors for saying, well, we do have a fast track route, back the actors will not stand in line to do, let's do the in-depth rigorous due diligence. They will take the fast track. So we need to be able to detect them already there. And this is obviously where it becomes very difficult to see who's what.
Anna, any thoughts on that?
Now, regarding good friction, of course, customers feel safer when they see that the company they want to open is doing a good, the checks are good, let's say. Potential option, as already discussed, we need to understand the risk associated with each customer we onboard and apply an ID verification method that is relevant to the risk associated. Yes, if it's a fast track, if there's no need for a person to go through enhanced due diligence, why go through enhanced due diligence? So understand the risk and implement an onboarding procedure that is indeed sufficient to mitigate those risks without causing unnecessary friction to the customer.
Cool. We'll get more into customer experience and user experience in a minute. I've got quite the philosophical question for you guys. But wrapping up this fraud section, I'd just like to understand what technologies or strategies that you guys deploy, without giving away your secret sauce, of course, that can help detect and mitigate fraud early in the onboarding process without adding that complexity. Could you sort of give us an insight into that, Bertram?
I think this is where it becomes really complicated to talk about, because obviously we are getting incredibly close to how we're actually protecting the bank, right? So it is about having the long-term strategy, and I think it's actually in principle based on what we've discussed today so far. So it is about what is the long-term solution? What is the trends that we're going towards? How do we share information with our regulators, FIUs, with our peer banks? How do we ensure that we understand the new regulations coming our way? So when we see these new trends from the EU on electronic IDs, do we actually understand where we're heading? What are the pitfalls that we see with these new regulations, and what should we be prepared for? Because with the new, if we take the electronic IDs as an example, with that new regulation, obviously there's a lot of good things. It's definitely on the right track. It's how we can have common IDs on our phones, electronically use that, cross-border, use it as a e-wallet, I even think is part of it, and have that as a user-friendly method in doing so. But with that, how do we then understand the current environment in Europe? Because this summer, as an example, I drove from our house in Denmark and we went on a summer holiday in Poland, and I had my electronic driving license, which is a recognized thing in Denmark. But when I got checked in Poland, all of a sudden they didn't trust this any longer. And now we want to build an entire way of having this as a sole ID and to create bank accounts and do transactions with. I see a lot of pitfalls. I see a lot of nuances in how we want to do that. And again, it comes back to, do we want to fix this in isolation, or do we actually see the broader scale of this? Do we want to do this as a European Union, or do I want to do it as a Bertram is doing it for one particular customer? And I think we have to come to have that agreement before we get it right.
Awesome. Yeah, because one of the strategies that we deploy is a multi-layered strategy, which I think is quite common. You start with data checks and then go doc, then biometrics. So yeah, same question to you, Anna. Any insights on that?
About the levels of verification?
About strategies and how to mitigate fraud early in the onboarding process.
You need to include definitely everything, actually, because you need a multi-level authentication, because authors are working in a similar way. They need to bypass level 1, then they need to bypass level 2, then they need to find ways to bypass level 3. That's why I come again to the same point. Make it as difficult as possible for the fraudster to abuse to bypass your onboarding procedure. And of course, I do believe in the human element. I always encourage the use of technology, but always with human supervision. So don't trust machines 100%. Use the human factor and use your people to review the outcome. Okay, it depends again on the risk of the customer. Some can just go through quickly, but from a level onwards, it's a good practice to have a human to oversee the decision, let's say, of the machine.
Awesome. Thank you. So going towards the user experience and the customer, and I want to ask quite a philosophical question that might be hard. So we talk about one word more than anything: trust, 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 trust in the digital global economy. But what I'd like to understand is, what does trust mean to you guys, to your business? When you talk about trust, what do you actually mean? It's quite a hard one, but Bertrand, do you want to tackle it?
We do see it as one of the pillars for how we are banking, right? And it does sound a bit off, but that's actually how we see it, right? Because we do need to have that trust building relationship with our customers. It goes broader than just the fraud aspects here. We need to be a sparring partner with our customers, so they could come to us for any single thing. It could be mortgage for the new house or the car, but it should obviously also be with their saving accounts and so on, the pensions and etc. Right? So we need to be a trusted partner with our customers. We also need to be trusted by the society and the countries that we are in, right? Because we are one of the biggest, largest banks here in the region, and obviously we need to take that responsibility to then say, well, with that, we are also ensuring that whoever is partnering with us, they can trust that, but also that we're setting the standards for how we want to do business and who we want to do business with. And if you think geopolitically for the past couple of years, this is where banks are really defining themselves, right? How do they want to be perceived in the market? How do they want to see themselves? And this is where trust is brought, right? Because there could be business opportunities in certain countries and markets, and there may be, from a legal perspective, that you could be doing it. However, a lot of banks, financial institutions define themselves this way of saying, yes, we want to pursue this and we want to provide that to our customers. That's one type of trust. Or to say, well, we want to be trusted as the one who's taking the right decision and say, we do not want to engage in this activity. So it's, as you started, philosophical. It's a very big question, and it can be, but you need to take all of it into account when you are defining where you want to be and where you want to position yourself.
Absolutely. What do you think, Anna? What does trust mean?
So I read last week about a bank. Many of his clients complained that they lost a lot of money due to fraud. So we are talking about trust here. Now, I am a consumer and I'm thinking to open an account with a bank. Am I going to open an account with that bank? Or even if I do, am I going to deposit my money with that bank? Maybe I will deposit 50 euros, 100 euros, up to there. But when you see many people complaining about that they fall victims of fraud and losing their money that they have with that specific bank, of course, if people don't trust you, they will not open an account with you. It's as simple as that. And this is a quote I really like. Someone, I don't remember who said that, but you need 20 years to build a reputation and 5 minutes to lose it. So one mistake can cause loss of customers. And recently we had a bank that collapsed not because of the wrong onboarding procedure, but because the customers lost the trust. I'm talking about Credit Suisse. What happened, why it went down? Because of a bank run. What is a bank run? Is when people are panicking and start withdrawing funds. This causes liquidity problems. They don't have enough cash to fund the demand of the people who want to withdraw their funds, because banks, what are they doing? They get the money and they give loans. So if the money were given to borrowers, then they cannot give that money to the people who want to withdraw their money. So you see, trust is important. Trust can help you grow, but trust can shut you down.
Yeah.
In some cases, it's usually in the middle, but it's risky. I mean, trust is definitely a must.
Yeah, absolutely. And so you've highlighted there that you can get fined, fraud losses. Is there anything in your mind that, sorry, let me rephrase it. What do you think companies from a UX level are doing wrong in their onboarding? Is there elements that you think some people are doing that undermines that trust, or common pitfalls that undermine that trust as they go through that onboarding? Anna first this time.
So first of all, I said that already, change. I see companies still insisting on doing things the traditional way. There are many levels of verifications, and for example, there are solutions to offer authentication of documents, or maybe they offer, as you said, many levels of verification, and the customer can choose one or two because it's cheaper, because it's faster, because the regulator, it satisfies the minimum requirement of the regulator. But again, this is not our issue. If our company falls a victim of fraud, the cost of the fraud will be paid by the company. So that's a problem. I believe that a pitfall that they have is this thing, that they don't choose a level of verification that is indeed mitigating their risks.
Right. Same question to you, Bertrand. Is there anything that you think companies are doing wrong that undermines that trust, maybe in the UX?
So I think in general, we continue to do it our way instead of fully understanding the customer needs and how they work. And that's sort of a very clear, if we had a common approach, peer banks, and understood our customers who are multi-banking, perhaps we could meet them in a better way. But I think in general, we need to bring it up to a higher level. And instead of only focusing on onboarding, we should think of KYC in a broader term. Because if we see and recognize the trends that perhaps the old version of doing ODD every year, third year, or fifth year, depending on risk categories, but moving towards a more of a trigger-based review, which trends are showing that's the direction that we're moving into, then perhaps we should already address that in the onboarding. So instead of having, let's just do a standard onboarding and then I do another ODD in 1 year or whenever there's a trigger. If I put a lot of focus in the onboarding process right now, I can make sure if I had it 100% right, there wouldn't be any triggers in the future. So the customers wouldn't feel any friction going forward, unless obviously there's regulatory changes, etc. But then we can work that in. However, what we're doing right now is that I do smooth and focus on a smooth onboarding. Then there's an event trigger, and then I do it every year if there's no other event triggers. So is it the smooth process from the only onboarding part, or is it the full customer life cycle that we're looking at? Because I could see the benefit in doing a bit more in-depth onboarding if we then prevent some of the triggers down the road, because every time there's a trigger, it's because I don't understand the customer well enough. Where we are discussing a bit with regulators, and this is we as broader terms, the banking community, regulators are not likely to go in the direction of saying the 135, don't do it any longer, it's all events. So it needs to be a balanced approach where we say, well, what does it mean to do an event trigger? How would that go? Who's doing what? And so on. And then have both scenarios, but where it makes relevant.
Brilliant. Just reminding all the attendees, please don't be shy, pop in your questions, and we'll see if we have time at the end. I would just like to ask one more question to wrap up, and then we'll see if there's questions. So this is quite just a summary. So in your mind, what are the top 3 things that a business has to think about when they're looking at their onboarding? What are the 3 most vital pieces? Bertrand, do you want to kick us off?
Sure. So I actually want to turn it around a bit and then say, if I were a customer, what would I be looking at? Because we're faced with some of the same issues over and over again. And it comes down to say, well, we want to focus on improving everything and we want to make it as easy as possible. However, it's the same pitfalls that they fall into. It's the same, Why is the organization chart not updated? Why is there not a clear overview of who's the management involved for each one of the entities in a larger group? Why is it not a clear governance structure? So I actually want to turn it around and say, this is likely to be the key information that we ask for every single customer. And it should be something that they knew already, but because they're not ready for that, it becomes a big issue that they need to do every time. And all of a sudden it's then returned to the bank and saying, why are you asking these difficult questions? Why are you so difficult to do onboarding with? But it actually is information that should be available within their own company. So if anyone on the call here recognize this, that we do have the same issues, it's about the customer dialogue to then say, we are going to ask about this. So have it ready, make it updated, make it relevant. Because if you talk to me or if you talk to my colleagues in our peer banks, it's the same questions that we're going to ask when it comes to this. So that's how I see that we can improve things, is to make it clearer what we are expecting and make that obvious for our customers so they know what to prepare for us when they do this.
Fabulous. Same question, Anna.
I would say three things to focus because the onboarding procedure is not only the identification, verification of the customer. First of all, focus on understanding what type of ID verification solution you need to have in place. Establish a good ID verification solution that effectively mitigates your risk and not your competitor's risk. Second one, ask good, well-designed questions. Why am I saying that? Because the purpose of the onboarding procedure is to help you understand who is your customer, how he generates his income, his wealth, and everything. So I've seen companies having a questionnaire, a risk assessment questionnaire, which consists of, I don't know, 100 questions, and still they are unable to understand their customers. There are companies that ask 20 questions or 10 questions, and they are very well designed and help them get a picture of their client. Okay. So second, have well-designed questions to be able to assess your customer. And the third one, use that information to create the customer's economic profile, because that profile is where you record this information, you understand your customer, and you're going to use that as the basis for transaction monitoring. Because if you don't have something to compare against the actual activity of the customer, then you have failed. You have not fulfilled your legal obligations. You need to have a basis which you will use in order to compare the actual activity of the customer. You need to know what to expect so you can compare the actual activity. So these three things I would recommend to our audience.
Fabulous. So I think we do have a couple of questions. So the first one, can speakers elaborate on the methodology of quality control on automatic onboarding processes? Who would like to take that one?
So I can begin, and Anna, please chip in as well. And Ellie, I know that you're an expert in this area perhaps as well too. So some of the elements we did touch upon a bit on how you ensure that the documents that you're receiving, that's the right, so you validate it, and to make sure how can you actually operate with this. I think one of the critical elements here is that we cannot rely completely on one source when it comes to this. It's too easy to manipulate. Anna, you pointed towards that companies are actually selling this as a product to say we do have, so you could have these solutions and products bought off the shelf to then manipulate and be onboarded in a bank. So it's quite crucial from a financial institution that we recognize this. We see the opportunity and how to make that clear and smooth, but that we also understand that with this new solution, that there are multiple risks, and we need to make sure that we actually have the right people that we are onboarding and that we are verifying perhaps through multiple.
I would second that. So with the quality control, again, for me, it's that multi-layered assurance strategy. So you start with, maybe if you're in the UK, data check, then you have the document, then you have the biometric. So you always are raising the assurance of that identity verification, so you can really assure that they are who they say they are. That's my two cents. Anna?
That was, I agree completely with that. I want to focus more on data, because accuracy of data is almost the weakest point in every process. In real life, for example, when we test the system, we see everything is okay. But when we actually implement that control, we see that things are very different. Why? In most of the cases, the problem is on the quality of data. If you have duplicate data, if you have bad quality data, outdated data, this is what you're going to get at the end of the day. The results will be not accurate. You need to put in, the input needs to be accurate, so the output is accurate. And so, companies tend to blame the tool. In most of the cases, the problem is in the data. So we need to validate and verify the data in the onboarding process, but also in transaction monitoring and other processes.
But Anna, if I may, I think you're absolutely right with the data, and it reminds me that it's actually part of the new AML regulation as well. It talks about who can share information and who has access to it. What I'm missing from that regulation is that financial institutions and banks are included in this data sharing. Because you're absolutely right, Anna. If we had better data sources, it would be much easier to validate. It would be much more, back to your question about fraud and trust, Ellie, we would be a much more trusted partner if we had the actual data sources. And I know this is why it's complicated, because each one of the European member states, they would have a different way of doing it. So you wouldn't just have one big data hub, which might be a good thing actually. But it's also that you would go to a governmental place to actually get the data that you need to validate an individual. We do have it in pockets, but I don't see it as big enough to actually use on a daily basis.
There was a question about GDPR and information sharing. I would like to highlight that, if I may. GDPR, if you read GDPR, because I went through it word by word more than one time, in the last articles, it says something that any other regulation supersedes GDPR. So if a country wants to create an information sharing database or procedure, it is allowed under GDPR to do it, as long as you're doing it to comply with your AML obligations. Plus, the GDPR has 6 legal bases of processing. One is to comply with your legal obligations, and the other is legitimate interests. Whatever basis the governments choose to use, they can do it. There is a way to do it. And, you know, in the US, they have FinCEN Exchange, which is an information sharing platform. How do they do it? They also have privacy laws. There is a way to do things. There are ways to do things the right way, and at the same time being compliant with GDPR. I just wanted to highlight that.
Brilliant.
And if I may echo that, Anna, because you're absolutely right. And I think that we are seeing countries who are taking that direction. I'm quite sure Ireland is taking that approach. I know the Baltics, as I mentioned, is taking that. I think Canada perhaps as well. But it's definitely an issue that we as a community have always used to say, well, we can't do our work in the fullest because of GDPR. But in reality, to your point exactly, Anna, there's actually legislation where it tells, unless there's other things preventing you, then you should be doing this. So when we talk to our vendors or peers or FIUs even, they are open to the idea of this. So we just need to have a common approach of how to do it, because I think we've been held back by GDPR for some time, and we need to recognize that it's actually not the reality. We should be using it. And actually GDPR is a good thing in this matter, because it then defines the rules of how we can share the information instead of preventing us from sharing the information.
This is a great conversation, but we're at the top of the hour, so I'm going to have to close it down. But any questions that have been asked, we'll make sure that we all take a look and get relevant answers back to you. But it just leaves to me to say thank you ever so much for attending this webinar. I think it's been a great conversation. Thank you to Bertram and Anna for your amazing insights. And hopefully now you know what you're doing wrong in your remote onboarding, and you can make some proactive changes to get those people onboarded faster, more securely, and more trusted. So that's it from us. Thank you once again for joining, and have a brilliant rest of the day.